Thank you, Charlie. The title is self-explanatory. I would like to invite my panel members to the stage. And as they arrive, as Charlie mentioned, my name is Luca Gori. I'm the co-head of the Emerging Growth and Venture Capital Group of DLA Piper. DLA Piper is a law firm. We have offices in 40 countries, and we would be very happy to help you with any of your legal needs. I would like to start the introduction with Takeshi. I don't know if we have the slides, Charlie, for Takeshi available.
Yeah. Hi, I'm Takeshi Kodama. I'm head of Jera Ventures and managing partner. So I'd like to introduce who Jera is first, and then after that, who Jera Ventures is. So Jera is Japan's leading and largest energy company to provide electricity to Japanese market, US market, and the European market as well. And one point is, we trade liquefied natural gas in global. So the trading volume of liquefied natural gas is actually world largest. And about the electricity side, so we provide around 33% of Japanese domestic electricity demand by a single company, us, Jera. So as the slide shows, so we have now say value chain from upstream side to downstream side. So upstream means upstream means we have tons of actually 7 projects now gas pumping, doing shipping and procurement and creating power and provide electricity to the wholesalers. So next, and the size of the power generation is approximately 59, so shy of 60 gigawatt size. So 1 gigawatt means 1 nuclear power plant. So which means we have around 60 nuclear power plants, literally speaking. So please go to the next slide. So regarding Jera Ventures is established back in 2023, so almost 3 years ago. So we have a balanced money budget to make direct investment in startups. And the fund size is $300 million US. And as of today, we have 9 partner companies, 2 in Europe, one in UK and 1 in France, and 3 in the United States and 4 in Japan. So which means we don't have any geographical preferences. So any startups who would like to have the strong interest in working with Jera, so we're more than happy to have further discussion to explore potential business opportunity with them. So the targeting stage is Series A. The typical check size is around 1 to 5 million US each, up to 10 million US. And the targeting scope is, the simplified word is to change the energy industry from scratch. So not only the decarbonization space, so we are very focused on Gen AI and large language model startups and physical AIs and so on. So that's Jera Ventures. Okay, thank you.
Thank you, Takeshi. And next, we have the European Space Agency with Gianluigi.
Okay, so good afternoon, good morning, everyone. It's a pleasure to be in in London in these days. It's very hot. It's a beautiful city, and moreover, it's very beautiful to be here. For us, I've been at the European Space Agency. We celebrate 50 years anniversary last year, and we've been quite a long tradition of activity that we do in space. However, I'm not sure how much you are familiar about what is happening in Europe. So because also, especially also recently on the IPO of SpaceX, there's a lot of things, what NASA does and what the US are doing. However, I decided to put this slide to show what are the, let's say, some key numbers for Europe. As you know, you may know the European Space Agency is an international body. It's not related to the Commission, where we have 23 member states. In particular, interesting is we have one cooperative state, which is Canada. So we have quite transverse and go beyond Europe. What we do is really we try to support the overall ecosystem from R&D to developing infrastructure, satellite mission, but also we operate the mission and we really try to harmonize the activity that are done at national level. Our shareholders are the member states of the different representatives of space in the different country. And what is very somehow remarkable is that last November, we had our ministerial council in Bremen, when we got quite a large subscription from our member states of 22 billion that we're going to be spending in 3 years. And so it's quite increasing, and then maybe we'll elaborate a little bit more with the comparison of what is happening in the US. But I want just to give you a sense how much activity we're doing in Europe, touching many, many fields. And maybe the other element that we want to highlight is that we are not, thank you so much, we are not investing in directly in space. We provide contracts to develop technology as a grant, mainly. We don't take any equity, or contract to build the satellite. What is important is we see that the space economy is growing very well, and we try to attract more and more the financial community. So 5 years ago, I created this investor network. We have quite a representative, Rob here with Seraphim, is a leader investor in the space. And what we do as ESA, we try really to leverage our know-how of the technical side. We have with all the engineering, the project manager, our view on the market, and we offer this to the network. And we try also to shape new financial products. For instance, we have launched a 500 million space lending envelope with the European Investment Bank. So in this context, for me, it's a pleasure to be here to, let's say, to share with you what we do in space. And the last point that I want to say in this quick introduction was basically we have this investor forum of the 18th of September in Paris, which we have a high-level panelists, which will present a different thematic, resilience, Earth observation in space transportation, so on. So it's a great opportunity if you want to know more about space to visit us.
Thank you, Gianluigi. Next, if we can go to Rob, please.
Good morning, everyone. Fantastic to be able to evangelize about space tech investment this morning. So a bit of background on me. I'm one of the general partners at Seraphim Space. At Seraphim, we launched the world's first venture capital fund focused on space a decade ago in 2016. Why did we do that? Well, we recognized that if you want to address some of the world's biggest challenges, from global security to climate change to the digital divide, space is the best domain to do that from. And if you're building a space business, you're building a venture scale business from day one. Space ultimately enables us to map, model, manage, and connect an entire Earth ecosystem in near real time. And there is no industry today that is not being impacted by space. From our perspective, over that decade, we've seen a massive change in the industry. When we set out a decade ago, $1 billion a year was being invested into space startups. In the trailing 12 months to the end of the first quarter, 18.8 billion was invested. So this is one of the fastest growing areas for venture capital investment globally. We ourselves are now a FTSE 250 company. Our market cap is over $1 billion. 20% of all the investments we've ever invested into have gone on to become unicorns. And last week, we celebrated our second decacorn company. So this is an ideal time to be investing into space. We've always had a strong corporate model. We have 13 corporate investors across our early stage venture funds and our London Stock Exchange listed fund as well. And it's very much global. 50% of our portfolio is in the US market, about 25% Europe, 20% UK, and also India and Japan as well. And to give a bit of context on where the space market is, last year, the space market was valued at in excess of 640 billion. That is twice the size of the AI market last year. And that's why it's such an exciting area for corporate activity and investors today. Thank you.
Thank you, Rob. And lastly, but not least, Louis, please.
Thanks, Luca. Hi, everyone. My name is Louis Head, and I'm a senior lawyer at DLA Piper, based here in London. My practice includes advising both the public and private sectors on government commercial contracting and regulatory matters in a range of sectors, particularly in aerospace and defence. I've probably become best recognised for advising on particularly complex major projects and procurements, including in highly regulated, highly secure projects such as defence, space and nuclear. I advise on space missions and related projects, including on contractual regulatory matters, but also work with a global team to advise on the whole life cycle of space missions, from commercial structuring, procurement, design, manufacture of the assets, through to transportation, launch of those assets, exploitation, operation of those assets in orbit, and end of life. I also actively advise investors and financiers in the defence and space sectors, working closely with Luca and others.
Thank you, Louis. So I wanted to start the first question with a quiz for the audience and ask to spot who the lawyer on the panel is, but he's already introduced himself, so I'll move on to the second question. Recent developments have exposed, and I wanted to ask it to Rob, how dependent armies and governments have become on Starlink and revealing the gap between ownership and operational capability. Are there any kind of alternatives or solutions for the Europeans that don't have the ownership of Starlink?
Well, I think the first thing to say is that space is ultimately critical national infrastructure for us, and it is the high ground from a defence perspective. So space enables us to control what's happening on the ground from a navigation perspective, a communications perspective, an intelligence, surveillance, reconnaissance perspective. So ultimately, without space, we can't control that terrestrial environment from a defence perspective. But also, space is now critical national infrastructure in terms of supporting our economies. If GPS went down, the UK economy would lose $1 billion a day. It's driving 18% of the GDP of the UK. So it's critical that we're protecting this infrastructure in space. In terms of Starlink specifically, then there is a consideration there. You know, we need to make sure that we've got continual assured access to these critical capabilities. What we're seeing now is new startups coming on stream that are solving this in different ways. We're seeing governments still engaging with Starlink, but also having backup capabilities as well. What's interesting is that it's not the traditional primes that are driving this. This is new startups coming into a market who are moving at high velocity to get this capability on stream as quickly as possible. We're seeing different approaches across both LEO and GEO to provide this kind of telecommunications infrastructure, and also companies who are enabling people to ultimately bounce off different providers at the same time, so providing ubiquitous connectivity irrespective of who the end supplier is.
Thank you, Robin. So the need is clear for investment. I wanted to ask Gianluigi whether the European and APAC space tech investment thesis has matured enough or is still waiting for the structural conditions to develop to make it competitive with the US ecosystem?
Sure. So, no, great question, Luca. So let's provide a little bit more details about. Let's say when we start supporting the project in space, we realized quite a long time ago that there was the need of supporting startup and entrepreneur into the sector. That one was more than 20 years ago. We have started creating the center of incubation, which are across Europe, with 30 center. We have 250 company, let's say, startup born every year. And what we do is also, once the companies, let's say, is following this incubation phase, we have many R&D projects which support the company to grow, to go from a low TRL to a high TRL. We do this in a co-funding spirit, where ESA is not taking any equity, but co-fund the technical development. And in order to fuel, as I was saying before, the development of this new business, what we try to do is, on one side, to involve more and more, let's say, the SMEs and the startup, the scaling up into the large project in Europe, but also to bridge the gap with the financial community, as I was saying before, with the investor network. Is this enough? No. It's the dynamics, as we have seen what is happening, let's say, not only in the US, but also in Asia, are very impressive. And so the sector is transforming. We are transforming the agencies to embrace this change, to be more open to innovative ideas. And a lot of this new company has been supported. For instance, we have an example is the exploration company that was one of incubation company in Germany, Munich area in 2021. Now it's is working with us to develop a capsule to bring cargo in space. So we are really try to change the sector and try to welcome innovative players that can disrupt. We can do much more. Of course, and we are doing this also with the Commission. Let's put it clearly. We are working together to support the development of the space economy in Europe, and in particular, what I'm focusing a lot, because we see a lot of interest on the early stage, on the VC side, as Rob mentioned, but also we try to attract more broad financial institution, go more to project financing, to try really to create a good terrain to develop the market and to increase revenue.
Thank you, Gianluigi. And Takeshi, what is your view from Japan of the ecosystem and the opportunities for investment?
Okay, so firstly, I'm an early background of the Access Space, a Japanese low orbital satellite startup, by utilizing an optical camera to monitor the global surveillance. And so I know the business of space not quite well, but I'm familiar with the space side. But the point is, the current Takaichi administration set a clear goal to weigh on 17, not a 70, but 17, say, focus points. I mean, say, the industry that where Japanese economy should focus on. So commercialization of space is one of them. And as of today, the Japanese government set a clear specialization, the budget size of 1 trillion Japanese yen, say divided by 200 pound is, say, you can find, let's say, the exact pound amount. But anyway, 1 trillion Japanese yen budget to subsidize the Japanese, say, space tech ecosystem. And one point is, at my previous job, Mitsui Fudosan set a, say, up innovation platform for just for the space tech area, together with JAXA, Japanese agency for space. So my understanding is, so the collaboration between Japanese, the government and private side is very important point to stimulate and to create the market. So finally, Japanese government set a clear goal to say set up a market size, Japanese market size in commercialization space, which is 8 billion Japanese yen by 2030 in 4 years. So this is my answer.
Thank you, Takeshi. And changing slightly subject to Luis, from an investor perspective, a private capital investor perspective, does the sovereign capital de-risk the market and attract private capital, or does it crowd out the commercial discipline and therefore prop up kind of zombie companies that should have gone and are still trading?
Thanks, Luca. I think sovereign capital has a critical role to play, but I think the really important thing is that sovereign capital is a signal and not a solution. Government funding can really help validate markets and crowd in private capital, but it can't substitute viable commercial models. An anchor customer, a government customer, a defence government off-taker can create predictable cash flows, particularly in the early days, which again is critical for unlocking VC and other private capital. But I think what's really important is that doesn't result in a kind of prolonging sort of survivability of businesses that don't have a kind of clear commercial model that functions independently of a subsidy provider. So I think what we need to obviously ensure is that kind of sovereign capital is deployed in a way that ensures that private capital is deployed and you have self-sufficient, high-quality players in the market. What we don't want to end up is sort of with a number of players in the market that are essentially only there because they're being subsidised. But, I think, it's really positive to see in a number of markets, you can see this playing out, the role that the anchor customer has played in really helping to build up these players. Earth observation is a great example with an anchor customer and how those commercial models have been proven, particularly with a number of use cases and really strong markets now. So I think sovereign capital has a critical role to play, but I think my main takeaway is, it's got to be there to unlock capital and shouldn't just be there to prop up businesses that may have an excellent technical solution but aren't commercially viable.
Thank you, Luis. And Rob, you as one of the earliest representatives of private capital, how do you view the possible competition from sovereign capital, or is it helpful to you?
I don't see any competition at all. I think they play a critical role in the financing of early stage space companies. I think ultimately, space is still capitally intensive. It typically, companies are raising around twice as big as the general tech VC market around earlier than normal. So sovereign capital plays a critical role. To Louis' point in terms of being a signal to the market, crowding capital into the market as well. I think the US market does that particularly well. It really stimulates the market interest. If you are a company that's going to be pre-revenue but has to raise 500 million to get to your minimum viable product, that is quite tough for the traditional late-stage capital allocators to understand that business model and what the milestones are. So having sovereign capital coming in and cornerstoning rounds is really important, and then that gives you the path through to potentially government procurement as well.
Thank you for that. We only have a short amount of time, so I think it would be amiss not to take the opportunity to ask our panelists if you have any questions. But my question and the answers for the audience, this will not be investment advice, is if you had to put capital into one segment of the space economy between now and 2030, 2040, which one would you pick? Maybe we can start with Rob and then proceed in order.
Well, I think the next driver we're seeing coming into the market is the convergence of AI, energy, and space. But in terms of a single market opportunity that I'm really interested in, that's in-space manufacturing of biologics, so space biotech. I think that's going to be one of the single biggest industries that we're going to see moving over the next 5 to 10 years.
Thank you. Gianluigi?
From my side, as I was saying, the space economy is quite broad. We are discussing about the relation with the resilience, the defense side, but we don't have to underestimate also the impact that space service can do on Earth. The GPS, Galileo activity that you mentioned, the connectivity, but also the Earth observation, the data that can really improve the reduction of the cost, increase productivity, and so on. So I think the more growing market. I'm also a big believer that in space operation, in space services, when you start to, let's say, to assemble big structure, moving satellite away from position and so on, which is also related to defense, is an area where I see a lot of value. That can be a good area for investment. But please don't undermine also the impact that space can do on our daily life. I think is also relevant for you as a corporate venture.
Takeshi?
I would pick it as space data center. So the combination of, say, energy and AI. So, yeah.
And Luis, any?
And I think just in a similar vein to a number of the panelists, I think for me, given the nature and the number of assets that are being launched, I think I'm looking predominantly at kind of secondary in-space services. So in-orbit servicing, refueling, active debris removal, I think are really interesting kind of secondary markets that I think we'll see really come to fruition.
Well, thank you. So thank you to our panelists and thank you to Charlie and the GCV for hosting us.